Because first thing, when you are investing, basically nothing is
guaranteed
and
Alright, hey guys, so it's Jordan here again. This is part 2 of the video, and we have CY here who will be answering a few questions that I have about insurance, right? The last time we talked about savings and endowments, so let's talk a little bit about investment. So I think in the insurance space, there's things called ILP, which is investment linked policies, right? Or investment linked plans. Is there a difference, between, let's say, me using investment linked plans or policies and me buying my own funds or buying my own ETFs?
Okay, so before I actually answer this part in terms of the difference between buying ILP, buying your funds, and buying stocks by yourself, I think it would be good for me to first clarify or rather explain a bit more in terms of ILP. So when it comes to ILP, there are typically two types of ILPs. One is the protection ILP, another one is the accumulation ILP. Basically what it means is that when you talk about protection ILP, the primary purpose is actually to offer financial protection for the customer.
Right.
When it talks about accumulation ILP, the primary objective is to grow money for the customer. So when you have these two different purpose being built for these two different type of policy, although it is still called under ILP, the umbrella, the features of the product and how it is being designed is very different. So for protection ILP, there is this very important thing called the cost of insurance or cost of mortality. So what does it mean? It just basically means that for every $100 of premium you put in, how much does it cost for the company to give you that amount of sum assured?
Right. Sum assured as in that if you pass on or something happens.
Correct. Death benefit, critical illness payout, early CI payout, disability strikes, so on and so forth. So when you really dive into a protection ILP and you look at it, if you start to do a comparison with the same amount of parameters, premiums, duration, and the funds that you choose, typically, accumulation ILP will definitely outperform a protection ILP because accumulation ILP probably almost zero cost of insurance.
Right. Or because it is built to accumulate wealth.
For the sake of simplicity, let's just term the policy ILP as a form of platform.
Okay.
So I think in terms of which platform you go to, I think the key distinguished thing that ILP offers is that it guarantees protection to your capital upon death, as compared to when you go to a platform like Mumu, Tiger. The only guarantee that you have for your money that is in the account is when your executor, or rather the administrator of your estate, pulls that money out,
right,
and give it to your dependents or your beneficiaries.
Right. Or my wife logs into my account and takes out the money from me.
Yes, correct.
Right. So just to summarize, the main difference of ILP and buying it yourself is basically you get a sum assured, or when you pass on, the money will still go back to your dependents or your loved ones or whoever you write it to, right?
Yes, correct.
But if I go to a broker like Mumu, Tiger, Weibo, or any other broker out there, I will have to write a will per se.
I mean, in terms of how they get the money back to
my dependents,
the beneficiaries.
Yeah.
Your dependents.
It might be a bit different.
It will be different.
Okay.
It will be a very different story. Yeah. Because first thing, when you are investing, basically nothing is
guaranteed,
and what the value that you get out of the account ultimately depends on what is the market condition at that point of time.
Fair enough. So let's say if it was, let's say if somebody passed on during COVID times, right? Then the market isn't doing so well. Basically, your portfolio is going to go like negative 20.
Yes.
Right. Yes. So with an ILP, there will be a sum assured in some way.
Okay. Not really. It says that there's a sum assured, but usually they will put that upon death, your capital investment with a nominal rate of returns, or your actual portfolio value with a bit more, like maybe 1% more.
Okay.
Yeah, whichever that is higher.
Right. Okay. So that's the main difference. As with brokers, it's gonna be at that market rate.
Yes.
Okay, got it. Okay, so CY, so let's say if I'm looking to invest into ILP, is there like things I should look out for, or like how do I know if I am suitable to purchase ILP? I mean, like you said in the previous video that not every policy will be suitable for everybody because everyone needs and wants are different, right?
Yes, correct.
So what are some things that I should look into before I start going into ILPs?
Well, typically, if for someone that should consider ILP are people who generally do not have that large sum of capital. So, for example, usually when you want to buy stocks by yourself, I know right now you can buy with just one lot or very small nominal sum, but then again, if you factor in transaction costs and stuff, it may not be worthwhile.
Yes.
But okay, so that's the side. So probably people who do not have a lump sum and people who are do not need that liquidity for that time horizon of 10 years minimally. Yeah, and also people who have no idea what is the investment out there like, or rather at least they don't really have the time themselves to go and manage. They may know a bit, it's okay, but more important is they do not have the time to actively manage their own portfolio. Because when you talk about ILP, basically the portfolio is kind of like managed by the agents, the consultants us. It is our duty to actually monitor how the funds are performing, and then what's the current market condition, and to actually have a discussion, to always go back to the client to actually review and have a discussion with them to understand what is their risk profile at that point of time when it's reviewing. I feel that a lot of people, when they, what I've observed so far is that when they buy insurance policy or rather ILP investment policy, they don't really review their own risk profile. Or in fact, when they do investment, they don't look into their own profile. They don't understand well enough. Yeah, they thought they can take on this type of risk, but in reality, they miss out certain circumstances which actually prove to be otherwise. Right. So when there is a mismatch in terms of your risk profile and your the instrument that you're investing in or the funds that you're investing in, then it's going to potentially cause issues.
Correct, right. So let's say if you have been investing in tech for the last 10 years, it has been great, but then I think this year is not so good, right? Yeah. So those with tech funds probably suffering a little bit here and there.
Correct, especially when after COVID started picking up. COVID started dying down. Then we started to see quite a big dip.
Right. So let's say if someone's going to get some this person's going to buy ILP, right? So are there any things that they need to look out for? So I think we chatted about this before, right? Things like the period. And I think let's say if you cannot keep up with the payments, there will probably be some loan somewhere somehow that's going to kick in, some bonuses, that kind of thing. Is there anything that people can look out for?
I think most importantly is before you commit into any insurance policy, make sure that you have sufficient emergency fund to tide you over the period whereby you suddenly get retrenched or you're not working. So, if you look at a general guideline being guideline, sometimes it may be different for different individuals. So that's where usually we come in to really assess to understand the person's comfort zone, comfort level. Some people, they may feel that 6 months of emergency fund is sufficient. Some people may feel that they need 1 year. Some people feel that within 1 month they are very confident that they will definitely be able to find a job.
Okay.
If you think about it, with Grab food delivery, people,
those are good jobs. I won't say they're the best jobs, but I think it's good jobs to tide over time. So emergency funds, right? Is it 6 months of income or 6 months of expenses? I think sometimes there's this sometimes there's this debate online, right? Say, emergency fund. I have 6 months of expenses. Then okay. Then you're going to have $0 after 6 months, right? But then if it's 6 months of income, then it's a whole different story, right?
Yes.
Your income can, let's say you're earning 6,000, but your expenditures may be 2,000.
Yes.
So having 6 months of income is technically almost 3 years or 1.5 years of expenses.
If you ask me, my personal take would be do it based on your expenses. Then more importantly is when you factor in the expenses, try not to leave out luxurious and entertainment.
So you want to go holiday.
Correct.
You want to have a beer.
Yes. Or sometimes, or you are someone that tends to be, for example, you're a tech geek, you love shopping for something, then you start to
That's my pitfall.
when you know yourself that once in a while you tend to take out some money to actually purchase items. So I think how you go about to set this emergency fund is important to really know yourself as well, to basically plan an amount such that you don't end up forcing yourself into a situation where you need to eat bread every day.
Fair enough.
So, but then again, there's a trade-off between keeping too much. So, therefore, it's always important, to constantly review, check back with yourself, every 6 months, 1 year, based on your circumstances at the present point in time. Your emergency fund is insufficient? Is it too much?
Right.
All these things.
So 6 months of expenses don't exclude luxurious stuff.
That is only if you are someone that you know that you need to have luxurious things around you, entertainment, in order for you to live a normal life. Otherwise, you go into depression kind of.
Yes.
scenario.
Very important. Very important.
So
thank you so much for your time.
you're welcome.
So this guy is CY again. Links will be in the description down below. You can check out what he does. So I'll see you guys in the next one.
All right. Bye.